Hello, this is Organization with Olu, and today we're going to talk about a private limited company, LTD. So stick around, you might like what I've got for you. So what I'm going to do right now is share my screen, doing GCSE, but also for anyone that is doing talking about a limited company as part of their business course. Okay, so let's start straight away. What is a private limited company? Okay, private limited company is one person. Okay, one person now that can set up, and he is now a shareholder. You can set it up. One person can set it up, and then you become a shareholder. Shareholders tend to be founding members, and a founding member is somebody that just basically has started the company. A few years ago, a number of years ago, you needed to have two people. You needed to have a company secretary as well. But right now, one person can set it up, and you automatically become a shareholder. Okay, and you can issue all the shares to yourself. Okay, and then you are what you call a founding member. So limited company, one of the restrictions for a limited company is that you cannot advertise your shares to the general public. That might be an advantage and it might be a disadvantage. Depends on how you look at it. But you cannot advertise your shares to the general public. Okay, so bear that in mind, and that's something useful to remember when you're talking about a PLC. Okay, a public limited company, which is completely different. Okay, now let's go to the next one. There can be restrictions, quite a lot of restrictions. Shares normally are sold to your family members. Maybe your friends as well, but to your family members. Remember, you cannot advertise. You cannot advertise your shares. For example, if a PLC like Marks and Spencer's wanted to raise some capital, they can pretty much, float and sell their shares and to the general public. Okay. And then any member of the general public can purchase their shares. But in this case, you cannot advertise. There's a distinct difference. Okay, so obviously capital is going to be restricted. There's going to be a big restriction of capital, but there are advantages of not allowing the general public to purchase your shares. Okay. Another one we're going to talk about here. What are the advantages of limited company? So let's start off with the advantages. One of the major advantages, the big advantage, and what you need to, because when you're talking about a limited company, especially in GCSE, you're going to compare it with a sole trader, or you're going to compare it with another type of own business ownership. And one of the the most important advantage, which you must not forget, is that it has what you call limited liability. And what does limited liability mean? It means that the shareholders' personal possessions are safe. So you only lose what you pay into the company. You are completely a separate legal identity. So in other words, you have your company which you set up, and you're completely separate. So any debt that the company has is not your debt. It's not. Compare that to a sole trader, because you and the company are one. In terms of a limited company, you are a separate legal identity. So therefore, whatever debt the company has, you do not have. Remember, you only lose what you put in. Okay, so that's a very, very important thing to remember. Okay, so that's the first massive advantage. It has a limited liability status. Second advantage, which is quite important as well, it normally has more status. It normally has more status than a sole trader. People normally take you a little bit more seriously. Okay, you go into a bank and you say you're a limited company, they tend to take you a little bit more seriously than being a sole trader, because you've got to register your company. Okay, people tend to take it more seriously. That's not saying you shouldn't, you shouldn't be. They don't take sole traders seriously, but people tend to take limited companies a little bit more seriously. Okay. The next advantage we're going to talk about. Next advantage is that there's no chance of any hostile takeovers, because you're only selling your shares to your family members. So there's no opportunity for hostile takeover. In PLC, that is a possibility where people can gang up together, buy a large amount of shares, over 50%, and try and take over your business. That can't happen in terms of an LTD, where it shouldn't happen. Very unlikely to happen, because you are in control of who buys your shares. You know your family members are buying it, or your friends are buying it, and that's it. No one else can buy it. So there's no chance of hostile takeover. Another advantage If the business founder member dies, the business does not die. Remember, you are separate. You are separate from your company. So if you unfortunately pass away, the company still remains because it's a separate legal identity. So it will still remain. And whoever owns the shares now owns the business. It's logical. If you think about it, if you think you're completely separate from the company, so unfortunately, if someone was to pass away, that company will still remain because it has its own legal identity. So what that means is that anybody that owns the shares will now take over the company. So that's a big advantage. You can pass it over to your children and stuff like that, and the company's still there. It doesn't disappear. Okay. Now let's go on to the disadvantages. Now, there are a number of disadvantages. Remember, we are comparing it to other types of ownership, business ownerships, especially to a sole trader. So when you compare it to a sole trader, then there's a lot of paperwork. There is a lot of paperwork for an LTD. Okay, you have to register your business at company house. There has to be an auditor that has to go through your accounts. There's lots of different types of paperwork you have to do. And guess what? You'll be fined. If you're late, you'll be fined. So you can pay quite a lot of fines. If you're somebody who's not very organized, you'll be paying lots of fines. So if you get a sole trader who's not that organized, maybe an LTD is something he doesn't want to do. He or she does not want to do because of the amount of paperwork. It is quite a lot compared to a sole trader. Okay, so just that one. Another thing, accounts can be seen by your competitors because your accounts have to be available for the general public. You have to have your accounts in company house. Just a small fee would enable people to go and see your accounts. So your competitors could possibly spy on you and they can see what you're doing. Okay. So that can happen. Okay. So that has to be seen as a disadvantage in terms of everyone can see your accounts. There's less flexibility. If you're a sole trader, you need a bit of money. You can take the money out. So far you record it, you can do that. You can get some money in. You can spend that. We can record it. That's allowed. In terms of an LTD, private limited company, you cannot do that because you are separate. You are an employee. You have your company. Yes, you might be the director. You might be the founder member, but in legal terms, you're an employee. So you have to have a pay slip. You have to pay proper income tax. You have to have a pay slip. You have to be paid a salary. You can't just take it out. Otherwise, you could be in a lot of trouble. So you cannot do that. So the flexibility is reduced. Where you're a sole trader, you're in the market, you make a little bit of money, you want to take that money and you want to buy something else. So far you record it, you can do that. But as if you have if you have an LTD, you cannot do that. So that's something you have to bear in mind. It's less flexibility for somebody who's a sole trader. So I've got a question for you. Tina is thinking of starting a hat business. She has an appointment with a bank manager. She wants to borrow £50,000 to start the business. She's unsure whether to be a sole trader or a limited company. What would you advise? She's come to you and say, look, I don't want to go to the bank and not know what I'm doing. I don't want the bank manager to ask me and I'm thinking, I don't know whether I want to be a sole trader. I don't know whether I want to be a limited company. So I want to know I want to make up my mind now. Can you help me? You're a business student. Can you help me? So what I want you to do is to look at both sides. Look at both sides and recommend. Okay, make sure you use the case study. So what I want you to do now is look at both sides, look at the advantage of her being a sole trader as opposed to her being an LTD, private limited company. And then you can look at the disadvantage as well. And then you need to then give a recommendation. Okay, have a go. Okay, so hopefully this has been useful for you. I'll do a lot more. So remember to share, like, and subscribe. And I'll see you later. Bye bye.